Caterpillar is the top performer on the Dow today. Stock up 7% or so after Jefferies upgraded the stock to a buy, saying that it's a strong hedge against commodity and general inflation. Joining us is the analyst behind that call, Stephen Volkmann. Stephen, good to have you on here. What are you expecting in terms of an investment cycle, this uptick in demand? Where might it come from for Cat? And I guess what's your case that it's not priced into the stock yet?
Great, sure. So thanks for having me. I think Joe actually just teed me up very well with all of this because it's clearly oil and gas, but it's a lot of other things as well. I'm sure your listeners know, 17% of natural gas, 15% each of thermal seaborne coal, seaborne met coal, 11% of oil, 5% each of copper, aluminum, nickel, and even a little bit more on platinum. So, Russia is the source of a lot of these things. I would agree that that market is essentially cut off from the West at this point and probably will be for the next several years. And so that's a higher inflation environment, at least for the commodities. And as you said, Cat's historically been a great store of value during the 1970s. I hope that's not where we're headed again, but during the 1970s, Cat was a massive outperformer for a decade and as a store of value. And I think to the second point, we are going to need to find other sources of these commodities. And we're going to have to build out capacity in other places, and Cat is a key producer of equipment for both mining and oil and gas.
But is it more of an inflation beneficiary than it is one of global growth, which is slowing on this whole thing, with Russia being cut off, the ripple effects on Europe, the potential for another European recession and any spillover effects there? Isn't that traditionally how Caterpillar is judged by the market?
Well, I hope we're not right with this, but it may outperform by just doing a little bit better than a weak market. Having said that, there's going to be a lot of growth. As I just said, we need to replace a lot of capacity in various mining sections, but also in oil and gas. And so you've seen, Germany's building LNG terminals, and they're going to need a source for that. And building those terminals also uses equipment. And let's not forget, we do have this build out of infrastructure that's still sort of in the pipeline. We haven't really spent even $1 of that yet, but it's all approved and ready to go. And so I actually think the growth side of this is going to be okay. But either way, I think you win.